Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Hey, sorry I'm a little bit late, but I was testing something for our little combine thing. I already messed it up. So let's go into the church really quick because we don't have much time. Okay, ES, a little bit of a bump overnight, but not much movement here. Treasuries, still kind of a little bit of a bid here, although I suspect that we could get a good number and could hit them down really hard. So, yeah, that's kind of what I'm thinking here. Oil, big move yesterday, but then it came back after the OPEC meeting was extended. Like, they stopped the meeting and said, we're going to come back tomorrow. So that's why oil is doing what it's doing. Silver and gold still slightly bullish coming up here. But you know what? It all doesn't matter here because dollar's still looking really, really strong, by the way. Doesn't matter because we're going to get this jobs number. So, man. Okay, so there's the news. And we are getting, what is it? What's the number? 850K. 850K. Hoo boy. Oops, I should, yeah, there we go. Okay. So it was better than expected. And what about the other news here? Hourly earnings 3.7. This is bad. This Okay, so that whole thing about I don't know if Gabby works anymore, I guess it does work and it just wasn't happening. Stopped me out on my 10-year trade there already, huh? So we're going to see, it looks like they're going to give us some grief over here. So I do see gold moving down. The E-mini is very bullish here, which is actually a little off from what I thought we might get. Huh. If you look at overnight, they already knew it was going to be good. Yeah. Yeah. Well, so I was thinking, here's the thing. I was doing this combine thing, and I was thinking, let's like just try and YOLO it on the non-farms, right? So like I got everything set up and everything, but then I started like testing the limits of the system, and just in testing the limits of the system, I broke the combine account. So I sent them to reset it, but I was thinking, if I could just go short 161.00 in ZB and then just hold it, right? And that it's not straight doing that at the moment, is it? I think this is one of those situations, though, where it's like maybe everybody was already short. See, look at that. That would, what is it? At 500 is where I have to puke. Yeah, so it wouldn't have worked out anyways. That is super interesting, though, don't you think? Why such a strong bid? Is there something in these numbers I'm missing? That looks to me more than just like short covering temporary market inefficiency. Okay, unemployment rate ticked up to 5.9 versus the forecast of 5.6 in a previous reading of 5.8. The non-farm employment change was 850 versus 725, and hourly earnings was spot 3 versus a forecast spot 3. I don't know. Still not cooperating over there. Well, since that didn't work out, I'm going to turn this order column off. You know, as of late, the trade has been, there's a pretty big beat or miss or whatever, and they just take off, you know, and you can hold it all day. But that doesn't appear to be what's happening today. I'm going to wait another 5 minutes since it's still moving quite a bit here to turn on the robot. Damn. Even the as she goes didn't really work out that well. I mean, it may catch it, but I think I can tighten it up here now. Darn. Yeah, that's a loser. 24.21 into 132.16. Oh yeah, I saw that Musk had tweeted about that yesterday, and I was very much like, okay. Because, first of all, I was surprised that he was still tweeting about that stuff. And second of all, I was like, the market didn't react that time. So that was interesting. We'll see how helpful the twits will be. Well, did you see that Dogecoin accounted for like 35% of their profits in cryptocurrencies from Coinbase, and that was like a pretty good portion of their profits overall? It was a little disturbing to me. So I'm wondering, maybe if I had done it with one contract, but that would have only been $500. It's interesting how the dollar versus the ES don't seem as correlated. Well, the dollar and the ES, first of all, tend to be inversely correlated. Yeah. Oh, I see what you meant to say. They don't seem to be as inversely correlated. Well, they're being inversely correlated during this move, though. Well, you're right. Over the week, they haven't been too correlated. But I think that's because the ES has just not been moving, and dollar shorts have been covering. This move here certainly looks good for the dollar shorts, though. Hmm. Okay, well, let's another loser. So I'm 1, 2, 3, 4 versus 1, 2, 3. Seems random to me. Yep. I really need to lock it in here. Nope. E-mini, at the moment, the E-mini is being a much easier trade, right? But I don't know. It's all a little weird. Well, actually, the thing that's weird about it is that it's not weird. Like, what we've had recently has been the news will come out and we'll get a good impulse. Maybe it comes back a little bit, and then it's just like trend all day. This is like way more choppy. And what I'm seeing right now reminds me much more of like what a non-farms payroll pre-pandemic looked like to me. You know what I mean? Like we're getting back into that spot where it's like, even if it was a really good number, there's a lot of volatility. It's hard to hold stops, and it just kind of ends up being a mess. Like I'm like, you think about it, it's like, who's gonna buy 3,000 contracts of treasuries here? Like, why? Why is that happening? Okay, well, what was I trying to do there? Oh yeah, I will turn on J now. Oh, ECB's LaGuardia is speaking. Any hot stocks. I do not give recommendations or tips on individual stocks to trade. Maybe at some point in the future, we might dive. I mean, in the past, I've looked at particularly popular moves like the GameStop thing, or way before that, it was Procter and Gamble or Nike. And talk about what is actually going on. But I don't want to be in the business of pumping stocks. Let's see, that one's not going to work either. No, sir. I think these ones have just been failing because they're sells and the market wants to buy. But yeah. But that's just kind of where I'm going into, like, I'm not in sync with it at all. Like the thing that I'm looking for, it doesn't seem to matter right now. Of course, if I had been buying, then maybe I would be like, oh yeah, it like totally matters right now. But it's really curious. What a few indicators that I have? I have a number of things up on the screen that you can see at the moment. For instance, I have these are all the things that are included in my Speculator Seth NinjaTrader indicator package. My algorithms use these to trade more. So, really, when I'm doing my discretionary trading, it is mostly me listening to the news and watching the order books up here. So these are cool, but I wouldn't concern myself too much with them. Does it really help? Well, so I have an algorithm right now that we're still kind of testing. We're going to run it on a combine. I would like to give it a few more months of testing because there's some other things that I want to test just to be sure. Like, not everything that I do with it can be back tested correctly. But I had an opportunity to test it on a combine. So next week, we're probably going to be running that on the combine. But my initial results suggest that it does really help. Although there appears to be some sort of Markovian model underneath that we could probably improve it a lot. Basically, depending on what kind of a market it is, you have to flip through the inverse of it. I don't know if that probably didn't make sense at all, did it? There are some. So what it's doing is it's filtering out the order book and seeing whether the offers or the bids are heavier, and then making a decision about what direction it's going to go based off of that. And what I'm saying is that there are certain market conditions where you want it to go towards the liquidity, and certain market conditions where it will go away from the liquidity. And I think that if I set up a statistical model where I had the market in multiple modes and a couple of different observation variables, and then trained it so that it would calculate what mode it thinks it's in based on the observations, that we could probably get a way more reliable signal. But as it is now, suggests that it will improve the rate of the robot by about 5%. So it takes it from like a 55% winning strategy to a 60% winning strategy. Yeah. So Gamma Trader in Discord is kind of pointing out here, we had more jobs than expected, and yet unemployment is higher than expected. Shouldn't it be the other way around, like more jobs equals less unemployment? So he's bringing up a good point, and this is probably why the market is being so screwy, at least in the treasuries, because over here in the E-mini, what we get, the payrolls suggests that we did hire a lot of people. So that's good for the E-mini overall. But the treasuries, it's not just enough that, the economy is going well. They have to meet their employment mandates. So in the treasury, for the unemployment to tick up again, kind of means maybe they can't raise interest rates. Now, how do you get a discrepancy between the two of them? remember that the two numbers come from different sources, even though they're in the same report. The unemployment is a survey, and the jobs numbers comes from the payroll reporters. So actually, let's put that in here in Discord. What determines price going is away from or versus towards liquidity, because otherwise liquidity or lack of is a superfluous concept. So I'm not exactly 100% sure. It has something to do with what kind of a day, whether we're on a trend day or kind of a slow day is one factor, and whether we're going up or down. I think there's a complicated system underneath. I remember when I worked at one of the large banks, them talking about this sort of a thing, that the way that the order book, the way that they read those imbalances was dependent on a number of factors. And they said that it was too complicated to explain there on the spot. I wouldn't call it a superfluous concept, but rather like it kind of tells you something about how the market is trying to trade, right? So if they go towards liquidity, that is, when I go and I do the math, there are more bids than there are offers, and they go through those bids. That kind of suggests to me that like people are taking trades and then putting their targets out down here and expecting to get fills, right? Versus if they go towards the area that has less liquidity, that's kind of more like it's running away from them because there's too many people going that way and they're getting squeezed. Anyways. Just because it's not, well, let me back up. You're going to find that most things in trading are like that. That you can't come in and say, okay, here is the indicator. If this thing says positive, then I buy. If this thing says negative, then I sell. It almost never works that way. Anything that is that straightforward is going to get arbitraged out of the market very easily, especially something so obvious, and clear to us. So it generally has to be much more nuanced, where it's like, in this type of market condition, then you take that trade, right? So I give you a really good example, okay? Like a really, really good example. This is a trade that has been explained by John Grady in the past. He had an article in a magazine and he talked about it. So say we're near the high, like right now we're really up there. So let's say that we ticked up to 23.0, and then I saw 3,000 to 5,000 contracts absorb at 23 on the bid, right? That can be an indication that they're going to pull their offers at 23.5, 24, 24.5 and try and spike price through it, right? That makes sense. They'll absorb a bunch of contracts here, and then they'll pull their contracts here in hopes that the price will like spike up and that all these people will get stopped out and stuff on the high of the day. Okay. If it is a trend day, that trade will work literally every time. And it is the most fun, most reliable trade I have found. if it is a trend day. If it's not a trend day, it's 50-50. If it's a slow day, it almost never works. Well, they got up there to the highs of the session again, and they actually did tick some new highs, but they came back awfully quick. The 5-year in particular really moved. So the spread is maybe belying what is going on here, because okay. Cool level of knowledge. Thank you. Well, let me tell you what I just told you about the level break trade. Level break trade is like the most classic beginner order flow setup I can think of. It's very, very obvious. At the high, see a bunch of contracts absorb just below the high. It's a trend day. They tend to go higher. Easy trade. But like I said, during normal action, it's like a 50-50. And so then beyond that, what you've got to know in order to figure things out, it gets much, much more complicated. I think that a lot of us, especially when we start, we want to be able to say, okay, like here's an easy setup. Like that one is like a very clear to describe setup. Like here are the set of conditions that you're looking for, and here's what you take, right? It's a trend day, absorption, but just below the high. You buy it on expectation of higher, and you don't have to take a lot of risk on that one either. Like if it goes offer, then you just get out. Only lose a tick. Okay, but generally speaking, we need to have a much more nuanced reading of the flow, because it's not very often that the actual market data will really give us a clear picture of what is going to happen in the future, right? So that's where we need to be able to look at it, like the news, for instance. Like right now, it's the news, right? We had the non-farms payroll. It seemed initially that it was a really good number and that this could just trend all day, but it didn't, right? So why is that? Well, I think it's because the unemployment number did not match the non-farms payrolls, right? And so then I have to go in and read the order flow and try and make some decisions from the order flow. It looks to me like a lot of people got short and are now having to bail, getting squeezed, essentially. Being a trader is very much, it's exactly the same thing. Really, you're going to want to try and find your own market inefficiencies that nobody else sees. And in order to do that, you're going to have to know a lot about the markets and the order flow and everything else. So, unfortunately, that beginner knowledge, those straight setups aren't enough. Even if you're an expert and you know everything there is to know about the order flow, you have a hard time. I kind of want to take a little bit more of a swingy trade in the 10-year. Okay, let's try it. so I'm going to risk 8 ticks. I want to make 16. It's a little risky where we're at, right? Dollars getting creamed. Gold and silver moving up. Japanese yen is moving up. That could be a reason for the treasuries to be moving the way that they are as well. Because I think off of this news, I think that the dollar should be weaker. I think that the numbers that we got are inflationary, right? Or at least should make the markets concerned about inflation. Like that the Federal Reserve is going to be hesitant to raise rates, but that they do need to be raised. Yeah. Haven't been paying attention to TweetDeck. I don't really think that my mind is really locked in today, you know? There is a video later today on YouTube about the Bitcoin blockchain. Okay, good deal. He hasn't done this is Nassim Taleb. He hasn't done one of those in a while, so. Cryptocurrencies react to this? No, they haven't. He just wants to go long. Oh man, the AC turned on. It feels so good. Are we at all-time highs? I believe we are. Yep. I'm a little concerned about a rug pull still. So the issue is there is reason to believe that the treasuries may sell off. And if the treasuries do sell off, that could cause some bearishness in the E-mini as well. And considering that we're so high up, like, this is a good setup for a gap fill in the E-mini too. However, I also think that the news is unquestionably bullish. Right? It's like, it's unquestionably bullish. It's just like the treasuries are not behaving like normal. The treasuries are saying like, there's way more to this than like your gut reaction to the non-farm number was. I would expect that this news is bullish for gold/Bitcoin to hedge against further inflation concerns. You would think that, Tash, but the issue is that when we get rises in interest rates, it destroys gold and silver. That's not what's happening at the moment. Gold and silver are doing well, but the treasuries didn't move down. Putting most of my eggs at one point. How is Bitcoin looking? Well, they haven't done a whole lot this week, to be honest. So here's the thing in Bitcoin. Man, let me hold a second. Okay. A lot of the rise in Bitcoin has been accompanied by large prints in Tether. There has been a lot of discussion and everything about how Tether is the only reason the market is up and that it's all a giant fraud and yada, 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 right? Okay. All of that aside, we have not seen much prints over in Tether, nor much movement over in Bitcoin at all. So this reminds me of just like after the 2017 market crash, that Bitcoin just kind of goes quiet. People start looking to a level down at the bottom that's like, this is the level that should hold. And then you probably see a washout of that level, right? Altcoin looks like they're already in a bear market. Oh yeah, well everything was. It's like as soon as that big down day came, right? So the over in Bitcoin, of course they could make a move, and maybe they do another one of them weekend moves. I haven't seen that in a while. That's maybe overdue. But overall, it kind of looks to me like Bitcoin is just kind of like the interest is gone. That's true, but I mean, further price inflation concern, not interest rates. Well, yeah. Your indicators say ES is going down? Okay. Market is extended. We never go down. When I look at this, all I can say is that the market microstructure does not seem to be behaving the way that I want it to. Should I say I want it to? Because I'm not sure how much of what I'm expecting is really like legitimate versus me trying to impose my will on the market, you know? I could just be like really off today. Okay. I don't know. I feel like I've kind of been a little bit off all week. I haven't really had many good scalps, and it's summer action, so I kind of don't really think too much about it because I don't expect to do well during the summer. But it hasn't been very good, and it's just kind of been like churning and stuff. So I come over here, it's a non-farms day. Okay, now we should get some action. We are getting some action, but like the way that it's moving is still in a way that my predictions haven't been very good. So I decided to screw that and try and do more of a swing trade, which I wouldn't do if I was doing that live, by the way, right? Because like if I don't understand what it's doing, then it's like you just quit, right? But we can switch around and see if our larger theory about the way that assets should move based on the news is true, and that it's just taking a while for them to do it. That's why I'm short the Treasury, but not the E-mini. Yeah, there you go, James. Due to over a 25 trading year career, I have seen 68 profitable strategies taken from me for one reason or another. One of those for those of you killing it, relying on speed or some mean reversion algo and thinking you're good for life, you are not. There's someone planning your demise right now. Yep. McCain blasts misogyny of view coverage in exiting remarks. That's interesting. You know me, I just can't resist when it's about the view, I guess. Well, so far this move in the Treasury seems to be working. Freight train trading, it says that's what I wanted to ask you about. What, the summer behavior? There's a herd behavior factor where people see Green Day and it's moving and they buy. Oh, you want to know about the volume weighted average yeet? Or the VWAP? Oh, the VWAP. So on the channel, I have a video called like, what is the best moving average? And at the end of that video, I test some volume weighted average price strategies. And the general gist of what we get is that there tends to be bounces off of the volume weighted average price. They tend to revert back to the volume weighted average price and then bounce off of it. But when they don't bounce off of it, you tend to get much stronger moves. So trading the bounce of the VWAP is not a profitable strategy because of the fat tails. If you trade the cross of it, you can get bigger trades. So I'll say something else about volume weighted average price. Okay. Prior to well, let's see here. What year was it? Oh, 2000. It was 2000. Yeah. So, prior to 2000, the way that most institutions kind of gauged their effectiveness was what their average position was compared to the VWAP, right? So if I'm buying multiple contracts I want to buy and my average price is below the VWAP, then it did pretty good. And I can look at the VWAP to kind of make some estimates about how much money you're going to make and things like that, right? Then in 2000, a paper came out by Almgren and Chris where they used a model to calculate a way to distribute your trades out in so that it would have the smallest impact on the market given certain market conditions and parameters and so forth. Okay. So when that Almgren and Chris paper came in, well, basically the gist of it was, here is an algorithm that we can prove works better than VWAP. Essentially is what they did, right? Unfortunately, it's not something that I can just like draw a line on a chart, right? Their thing is a lot more like, here's the number of contracts that you have to trade. Here's how you should space them out and how many, should you trade more at the beginning or at the end, and, based on your risk parameters and what the bias of the index is at that time, you can kind of determine those things. All right. So it's much more timing based than it is a particular price. Right. But I digress. The point of that, it was VWAP used to be really useful because all of the institutions used it. Now, the institutions that are probably there are institutions that are still using it, but those are like the institutions that are behind the curve because it's been now over 20 years since VWAP has been supplanted or whatever. You got a point? I'm actually surprised that all you've gotten is a point so far. It's been relatively calm now. Tight. I thought that the volatility would remain elevated going into the open. Certainly, though, when the open comes, we'll probably get another bout of volatility, right? Got to harvest early in summer, yeah. Even on a non-farms day. I guess another thing is like it's a non-farms day before a 3-day weekend. You can just tell from the way that I'm speaking that I'm off, right? I think I'm off because I'm a little disappointed that the treasuries just didn't careen down. So I was up there in the shower and I was like, not pretty sure that payroll is going to be above the expectation. Like, if you had asked me, like, 800s would have been my answer. So, like, the news came out, like, that's where it's really screws me up, is like I had this like full fantasy scenario in my head, but it didn't work out that way. And the funny thing is that I got the number correct. It's just the market didn't react to the number the way that I expected. Won't it go down in the open? The E-mini? I don't. Hard for me to say what the E-mini is going to do there, man. ZN on the open? I'm hoping that it will go down on the open. That people will buy the equities and sell treasuries to fund it. Yeah. I read a study yesterday that suggested that trading the yield curve. Okay, so I think they call that the carry trade, right? You sell the treasuries to fund buying the S&P 500, right? And that's the big trade that everybody pulls off, makes money off of, right? This study suggested that just trading the yield curve, a mean reversion in the yield curve, was more profitable. Isn't that interesting? Here, wait, I have it on here. I'll show you. Our analysis shows that there exists a set of mean reverting trades that appear to offer, on average, superior payoffs even after accounting for transaction costs over the period considered in our study. We compared these payoffs with two benchmarks. The first benchmark is a cash-free investment in the Lehman Brothers Government Intermediate Index. This essentially involves buying the index, which consists of a portfolio of bonds with maturities ranging from 1 to 10 years and selling short 1-month U.S. Treasury bills, thereby earning the term premium. The second benchmark involves a risk-adjusted strategy of investing in the S&P 500 index and funding the trade by also shorting 1-month U.S. Treasury bills. In this comparison, we found that some yield curve strategies outperform the S&P 500 strategy by up to 5.7 times and the Lehman Bond Index strategy by up to 4.8 times, based on a comparison of the risk-adjusted average gross payoffs. And then we're moving down a little bit. When you come in here, they talk about the strategies. And down in here, I think, if we get bigger here, they say, okay, so they said there was some that were almost 5.7 times more profitable, right? So that is yield spread 2B. So then we come back up here and I'll read to you what 2B is, okay? So 2A is mean reversion of yield spread for the whole yield curve. 2B, mean reversion of the yield spreads between two adjacent bonds. Okay, this trade is based on the view that the yield spread between two adjacent bonds of maturities X minus 1 months and Y minus 1 months with Y less than or equal to X on the 1 month forward yield curve would mean revert to the corresponding spread on the unconditional yield curve. Okay, so what they're saying is they're looking at the forwards, and based on the spread that they see in the forwards, they look for that to mean revert, and they do that by trading that on the unconditional yield curve is what they call it, which I think just means just buying the regular cash treasuries. Isn't that interesting? So I think you can even look at that. Like, do they show the forwards on the CME? I don't recall if they do or not. It's like they're going my way again. Come to the 10 years. It'll work here. Okay, yes. Well, maybe not. Are you aware of any other instrument that's faster than UB? For treasuries, I think that UB is the biggest one. Maybe someday they make a 50 or a 100-year bond, and then that would really move, right? Also, when they make the when we have treasury yield futures, those will move more. Those will move twice as many. So when you trade the 30 over there, it will trade UB times 2, probably. So that's probably going to be your best bet. Be interesting to see what the liquidity looks like in that instrument, because, yeah. I swear I saw somewhere that I can look at the forwards. I can probably calculate the forwards. I think it's possible for me to look at the OTR and calculate the forward. I should look into that. Oh, that's exactly what I should do. Should we just do it right now? Or we could do that on Monday. What do you guys think? I kind of feel like I should probably keep my eye on what's going on here in the market for us, because we're going to have the open here. It's going to do some interesting stuff. But my recollection is that I can calculate the forwards. I was reading about it in a book. In my book, it was explaining how to get the forward rates. It was like once you had one of them, you could convert it into all of these other ones, given certain information. There's a couple of other things on here that I didn't remember or I haven't looked at before. Oh, it's really moving down now, isn't it? I had somewhere I was able to chart forwards. I swear, maybe it was on Fidelity that I could see forwards. Someone do my work for me. How much per point on the NQ? A lot. And no, I didn't take an NQ trade. Ah! Okay, a quarter of a point is $5. And they do trade NQ in quarters. So a full point would be $20 in NQ, right? I don't trade the NQ, but I make it look like I do on TV. Are you for real, Ace? They all want you to trade NQs, so you would take sim trades over there? That's funny. Okay, so the initial impulse in the E-mini is up, but it was a relatively gentle impulse so far. $5.5 points would be 110. Yes. Lucas says NFB crushed me. So did you try doing what I did and took a bunch of small scalps that just like didn't work out? got run over 2 times in a row for a full stop and then turned off my... Oh, man. Yeah, I'm still thinking about it. Like, what should I be doing in that situation? I'm not sure what the deal is. Like it seems like one problem is it's the summer, and one problem is that it was mixed news that it's hard for the market to sort out, you know? But I feel like there's something else I'm missing. I feel like, yeah, I don't know. There should be some inefficiency in there that I should be able to pull out, that, because when it's like that against you, you know? First time trading NFP in a very, very long time, yeah. Well, when I look at this, I'm thinking, hey, you know what? The way to do this is when the micro treasury futures come in to just place a bet on those based on that, because you're only risking like $20. Yeah, I forgot how it traded when it began moving. Yeah, and there was a lot of pulling on the queue, wasn't there? I had oatmeal this morning and it had like nuts in it, and I don't, my stomach is kind of sensitive to any kind of fiber in there, and I don't think that I really chewed it into like a really fine paste, and so like I just kind of feel icky inside. I think we need to look at a faster correlated instrument for clues on market direction, hence my question about UB. Could be. The thing is that the thing that I wish I could do is like a spreadsheet sort of a thing. So like, because the issue is if we have all of these correlated, right? Like right now they're all in line. And then let's say that they all tick. Okay, they all ticked down together. But let's say that only one ticked, right? Okay, so then is that something worth trying to take out? Well, no, because there's spreads, right? So then I have to consider the spread. And right now the spread is steepening. So what I should see is the ZB should go down like 2 or 3, and the ZN will go down 2, and the ZF will go down 1, right? So if I see the ZF, well, and we only want to take it short. So that's where it's like, okay, like this one right here, it flattened a little bit. The ZBA came back up a little bit. So then would it make sense to short 18? Or maybe try and get a fill at 16.5 and take it out? Well, based on the way that the spreads are going, that's not a big enough divergence to really say, right? So, but what we can do is we could go through and we could say, okay, so if the yield curve changes, at what point is a change in the yield curve so much that it's unusual? Get what I mean? And that's where probably being able to see the forward yield curve would be useful. You see right there, the market direction was higher in ZB. Well, that's true to an extent. But like I said, it's because the spread is steepening. Wow, NQ took back from me? Yeah, that's what NQ does, man. NQ is the widowmaker of day trading instruments for sure. It's like playing with snakes. Is the dollar gonna wipe back out? So the dollar's doing some interesting stuff, and the E-mini is so unusually tight. So there's not something else I'm missing, is there? Factory orders, the top of the hour. That doesn't seem to make sense. Kyle, good morning. Mohammed El Arain, what you conclude about overall about the U.S. jobs report for June, beyond mixed and confusing, depends on the weight you attribute to each of these factors, some of which are competing, and the more general characterization of labor market functioning and implications. Strong job creation versus stagnant labor force participation and employment population. Higher hourly wages versus lower hours worked. Higher women's labor participation versus higher long-term unemployment, higher minority unemployment. Lower U6 measure of unemployment versus higher U2 measure of unemployment. Have you ever traded the crude oil spreads? No. So when I started trading, here's my story. When Seth started trading, so I always wanted to trade. I was doing it like through Thinkorswim back in 2008. And then I got a job at the bank, and at the bank I couldn't use any of that sort of stuff. So I just had to go and look at what the price was. And for a long time I paid for the TradingView subscription. Like when TradingView was a brand new thing. And it's actually really surprising to me to see TradingView get as popular as it has, because back then I thought, oh, this is a great app, but I bet it's going to disappear like all the other ones that I was using. Anyways, so I would just watch the chart and I would put in trades ahead of time. I would say, okay, based on this piece of news, I buy it here, predetermined stops and targets and everything. And then I would just go through on a spreadsheet and go through like what I should have made. Okay. Now at the time, it was like when quantitative easing started. So I remember that really well, because everybody said, oh, if the Federal Reserve starts doing quantitative easing, it will be bad for the market, because that means that the market needs to be supported, which in retrospect is hilarious, right? In retrospect, it's hilarious, but people really thought it was going to be a bearish thing. Okay. That day that they announced it, the S&P 500 was down. And then in the overnight, it recovered. And then by the end of the next day, it was up. And at that point, everybody realized, oh, it is really, really stupid to try and short the market based off of quantitative easing. No joke, right? So then something funny started to happen, because there was so much liquidity floating around the market. Commodities would just take off. So it was basically like a different commodity would do it every day. And there would be like a little tiny spike in the morning. And then whichever one had the little tiny spike, you could just get in and ride all day. And there'd be a huge move up. And this happened over and over and over and over and over again. And so I had been doing that particularly on crude in my little scalping spreadsheet. And I had made tons in crude. Like on that spreadsheet, I gave myself $100,000. And by the end of it, it was worth $1 million. But I think that I was doing some things that I wouldn't have been able to do live. Like, I don't think that those results were accurate. I think that I might have been unknowingly cheating. Okay. But I had made a lot of it on crude. So then when I left the bank and I wanted to start trading futures and scalping and everything, I thought, well, let's start with crude oil and we can do these combines and stuff like that. I remember one day I was trading the crude oil and it was kind of moving down a little bit. And I thought, I was kind of leaning towards, I think it's going to go down. And I didn't know anything about, I was just reading the order flow based on what I had read. And all of a sudden, all of the inside bids and offers in crude oil disappeared. It was like 8 levels all at the same time basically went to practically zero. And the market paused for a second. And I was like, I'm pretty sure that's a bad thing. And so I clicked market sell. And then immediately after I got filled, then the market went, oh, okay, and started going down. And it was like this huge bender down move. I'm like, oh, I'm so good. So good at this in crude oil, right? This is just like what would happen when I was doing on my spreadsheet. It's all going to be good, right? Okay. And then that was like the last profitable trade they ever took in crude oil. Because after that, it was like I would lose every freaking time. You'd take the trade and there'd immediately be some spike against me. It was so frustrating. Oh my gosh. Crude oil. That thing, it lies to you, man. Like NQ is a widowmaker. NQ is just so violent that it has this tendency to just stop you out of nowhere, you know? But crude oil lies. Crude oil says, hey, you're doing a great job. You're a really good trader. And then it takes everything from you. The hardest thing with NQ is understanding that because it's moving doesn't mean you should take the trade. So learn to identify chop from movement. I think that those who teach have an advantage though because they can know what their students. Yeah, that's exactly it, Lucas. Like how many books have I? A lot of the more advanced stuff that we've been talking about later came from books and stuff that people recommended. Let's trade micro crude in July. It'll be fun. No. I think we should just trade micro treasuries. Man, it came back hard. I'm disappointed. I was like 3 ticks away. And then just a little bit of liquidity kind of started forming there around that 132.16 and they bounced hard off of it. There's kind of a longer term trend line at 132.16. And there was a lot of volume there yesterday when they puked. So I think that that's why they're doing this. But we have a different idea of fun. Well, so Ace, I didn't tell you what I tried doing this morning. Oh, man. Your story reminds me of a friend of mine who traded a couple of days for the first time, made money, and was like, this is so easy. I thought to myself, oh, boy, he is in trouble. Yeah. Oh, yeah. My wife, she traded it 1 day, 1 or 2 days, and she basically did mean reversion on crude oil, and she made like $1,000 in a day. She's like, why do you have such a hard time? I was like, yeah. You traded the 1 day in crude oil out of the whole year where mean reversion would have worked because that year was really trendy. I couldn't believe how lucky she had gotten. Beginner's luck, it seems. I think I would rather be like Gary Norton. The Gary Norton curse. Every time that he starts trading a market, there's like a big bad market turmoil in the market. So he always is experiencing the bear market first. That's hilarious. She needs to be in that seat. I wish. She told me that she thinks about doing it from time to time, but she just doesn't have the time to do it. In the morning, she's watching the kids, you know? I could probably switch her. I could tell her, okay, you're going to do the trading, and I'm going to get the kids ready. But the issue is that she's not a confident figure it out yourself kind of a person. You know what I mean? Her kids are like that too. Like, what was it? What was this that she was trying to do? Oh man. Michelle was trying to do something and she's like, how do you do this? And I was like, you'll figure it out. And she just didn't believe that she could do it. And it was like something really dumb and trivial too. Some technical thing. I don't remember what it was. But anyways, it was the same thing. Remember that one time when I took a trade and it was really good and we wanted to let it run? So I told Melissa to just babysit the trade. And then you guys watched on stream. You remember that one? And she was like, she didn't know what to do. She couldn't, yeah. So I would have to sit and like teach her for a couple of days before I think she would even feel really confident doing stuff on her own. Plus, when she did it, she had to use NinjaTrader, but now we could do it all in Jigsaw. I wish I had a way, you know, like you can use the Rhythmic Trader Pro to forward the data to, you know, your NinjaTrader and whatnot. I wish they could, I wish I could forward them between machines. Why her kids? Yeah, me and my wife, my wife and I have one child together, and then she has 3 children from a previous marriage. I guess I shouldn't call her kids, but I have a habit of doing that. The other day, somebody left like this huge mess out on the table, or you know, and they did something like really inconsiderate, and she's like, who would do that? And I'm like, all 3 of your kids. Oh, is Lucas a new mod? No, Lucas has been here from like the beginning. Hasn't it been the beginning, Lucas? I think so. He's very like, I can remember there was another guy, I think his name was Tucker. And he was really active in here for a while. And then one day he started getting like really mad at the market. And I kind of started prodding him because I was like, I'm pretty sure you like lost money from doing this, right? And but I was a little bit too mean and you left. But you know, he was like early on, he was like one of the most active people. But I think that Lucas was even before that. Lucas and Uzi were like the first really active subscribers. George says you're keeping it real. That's what you got to do when trading. The thing that's really difficult with running a stream around trading is that people just want you to be awesome at it all the time. I mean, like, I know that you guys don't expect that. Like Lucas and Ace, you guys know that sometimes I've done really stupid things and that I definitely don't have it all figured out. But like the general YouTube audience, they want you to just win like literally every time. So you get all these guys that, and I mean, it's a lot of them now. Oh, geez. Where they'll take trades where they have really wide stops and stuff so that they can be right like almost every time. And then, yeah, it works out. But then when they do lose, it's like they lose everything, right? And I think for most of them, like the audience doesn't really remember. But, you know, that's just the problem is like, how do you tell people that like, yeah, trading futures is hard. You're probably going to lose money. That doesn't mean that it's not worth pursuing, you know? Stupid Things is the name of my trading. I'm the master and I still suck sometimes. I just don't. Remember, Seth, don't use stops, then you won't be poor. There you go. Says Stock Market Steve. Yeah, exactly. 1 million realized volatility in SPX is now down around historical lows as per spxglobal.com. I think that the treasuries could have another move down, but they've kind of bounced down in that area a couple of times and had a bounce higher in the ZB. So at the moment, they're kind of suggesting that they want to just settle at 132.16, which was the pre-news move. So, okay, yeah. So the pre-news move was 132.16, and the markets are suggesting that we can't move below with 132.16. You've got to suck to be the master. I mean, so think back to like the way that I tend to trade, right? Like the way that I tend to trade is often wait for a piece of news, take advantage of the market inefficiency off of the news, right? Well, sometimes you come in and you misinterpret what the news is. Like I think today that's what we did. Like today I came in and I said, oh yeah, this is going to be a short in the treasury because the jobs number is going to be higher than expected, but the unemployment number increased too, and so that put this nuance into it that I didn't think that it would matter, but it mattered a lot. Apparently it matters a lot based off of what we've seen so far today, right? So then you lose, right? And it could still be that like you're right more often than you're wrong, and when you're right you can be like really hardcore right. But then the issue is that like sometimes when you're wrong, it's like the market can kind of flop around a bit, so you might have to be wrong like 3 or 4 times before you really truly realize that like you're dead wrong about the thing, right? And that's like a lot of risk. It's a lot of risk. Okay. And then you just get into these time periods where it's like there's no news whatsoever. So you still want to take trades, and you know what you've got to work with without the news isn't nearly as good. Or, you know, and then you've got like these periods where the technically based trades that you're trying to take just don't work at all. Right? I think it's really hard. Even if you're a good trader, you're still going to have like an unprofitable month sometimes. Not even sometimes, probably all the time. Right? And then what drives the YouTube algorithm? Oh, I made money over here. Come look. I hate it. I hate it. Like to me, micro treasury futures, to be able to come in and have a move as big as we've had here today and maybe lose max $30. That's great. That is what I want. I want to be able to come in. I want to be able to take any trade that I want, and even if I'm absolutely terrible at it, the most I lose is like $30. You know, that would be ideal. And then you build it up over time, and then if you are able to do something well off of the news, then like great. And if you don't, then you're not out anything. You know what I mean? Like that's what I think about it. Because trading is hard, but somebody has to do it. Like, that's the thing. Somebody has to do it. Like, you can't just leave it all up to the robots. There's problems with the robots. You can't leave it all up to the banks. There's problems with the banks. And frankly, the banks can't like even prop trade anymore. So who is the person out there saying, based on this news, this is which way it should be going, right? There's big retail traders, independent prop shop traders, you know, like people have to do it, and it's really hard to get good at, but if you really enjoy it, I think it's worth pursuing. IQ says the 25 tick range, it should die down till closing time because it's a holiday. That may be the case. We do get the factory orders at the top of the hour here. Note that the E-mini is still kind of trying to push on the highs, and that the S&P 500 and the 10-year Treasury are moving very much in tandem at the moment. Suppose you have a perfect correlation between two assets, you buy them 50-50 since they are log normal. Rather, can't trade below zero. The one who goes up eventually pushes harder than the one who goes down. What do you think? I'm not for sure what you mean. What's your win percentage? It's probably awful if we looked at like every trade. If I looked at every trade, I bet it's dismal. Let's look. I'm almost kind of like afraid to look. Oh, okay. Show stats. %38. Actually, that's not as bad as I thought it would be. Only 30% winners. But what is the MFE versus MAE? Oh man, I've had so much more adverse tick against me than favorable tick too. That's so frustrating. And how many did I take in E-mini? I don't think it's different. It's probably a very different way to do E-mini. So I only took like one trade in E-mini, huh? Yeah, two trades in E-mini. They're all in treasuries. Isn't that interesting? He might not look like it, but he's got. Well, I am pretty robotic most of the time, aren't I? Oh, I need to not talk in the low voice like that. You probably can't even hear what I'm saying. Sometimes I can be overly robotic and callous. Was a problem? No, it was just dismal trading, dude. Not even. Like, the issue is that something that I keep finding myself doing. I don't know why I do this. Is like, I come in and I'll be like, okay, I want to focus on this one trade. You know, like I want to take a 1 tick or 2 tick. So I just want to focus on that. But then it's like, that's not working. Then I'll change over to something else. And then I'll start doing something where I'll start averaging into a position or something like that. So then I'll have this huge loser in there that I really was just taking because I was like fed up with everything, right? I think that I'm developing a bad habit when I do that. But so when I come back and I look at my stats, like how much you actually would have made or lost, it's very not useful. When percentage, well, but in this case, it does mean something. Okay. I haven't been trying to get like an outsized risk reward this week or anything like that. I've taken a few trades, overwhelmingly when I started trying to take it, and I didn't take very many until Wednesday, right? But then past 3 days have been just terrible action for me. So it's interesting because the last bout of volatility that we had, when I was doing this trade, I did quite well. And I would get some good trends, but then I was just finding inefficiency and was like, I was always hitting it. Now when I take it, I'm like, what is wrong with me? Like, did I ever actually have anything? It seemed like at the time I knew exactly what I was looking for and when I wanted to take it and everything. And now all of a sudden I can't even remember like what it was that I thought I was seeing or was doing. And I just don't take it seriously because it's the summer. And I think that's a big part of the problem is that it's like summer. It's like I just don't care anymore. Because I know that the summer action tends to suck. Why not make a contacts plan? Well, I mean, I kind of do have that, but I don't. Log every trade journalytics is good. Well, yeah, I think what I need to do is I really need to say I'm only going to take these kinds of trades, you know? But like, so let me back up. When I came into this year, okay, what I said, well, let's even go further back than that. I did really amazing last summer, and I said, no, this is not because of anything about my strategy. This is just because the market's going up, right? So, but I was doing well, so I said, well, maybe when September comes along, I can try taking some risks. So then the election time came around, and I wanted to trade the election, and the election just did not go the way that I wanted it to in terms of how the markets behaved. So I wasn't able to get anything off of that. And so I just said, all right, fine. I'm just going to leave it alone for a while and save up for a bigger account and try to do something different. And at the time I had been spending a lot of time on certain algorithms, right? So I had like a ton of them that appeared to do well in the back tests. And then as we got deeper and deeper and deeper into it, we kind of like ruled them out one by one until there's only one left. And the one that we have left, I think the only reason we have it left is because there's just no way to really see how it will trade until you trade it. And I've been trading it in June and it did okay. So we're going to take that one. But the whole thing was when I came in January, I said, I am going to focus on the robots first. Okay. So it did that. And like I got the one thing. But then the micro treasuries came along and I said, well, I could probably trade micro treasuries. I think though that I need to look for areas where I really have a really confident read. From a fundamental perspective about which way it's going to go. And that doesn't happen very often. And sometimes it's not really clear when you have that and when you don't, you know? So during this time, so if I'm going to do the micro treasury futures, what should I be practicing now? What should I be practicing now? And so what I did was I kept doing what I had been doing in the E-mini, which hasn't been working as well. Like the market stopped being in the just go up all of the time kind of action, and it's been a lot harder. And I tried doing this like pure scalp experiment. And I've had periods where the pure scalp experiment like really, really worked, but now I'm having periods where, at least this week, it hasn't worked well at all. Right? So on that one, I'm not going to say that like that it doesn't work. I'm only going to say I think that I don't understand what is pushing the treasuries at any one given moment right now. I'm not in sync with the market. There's probably some really critical information that we as retail traders don't really have available to us. And so it's just really, really difficult in the treasury. And in the E-mini, it's like, it's the same sort of a problem. Well, and the E-mini, I feel like I have a pretty good read over what it's going to do from day to day, but there's just a little bit too much noise in there for it to work. Robots can only work if you can do AI. Well, we do need to start implementing some machine learning stuff in there, but I'm mostly doing machine learning through back testing variables. If you change it anytime you do it badly, well, that's not what I've been doing. No. So I always did the 10-year treasury until the micros came out, and then there I liked the risk in the ES better. But I've never been able to trade the ES as well. I just never have. Like, as far as I can tell, whether I do good or bad has entirely to do with how overly exuberant the ES is, like if it's moving the trend day up in the ES, then I can make money. And if it's not, then I don't. Whereas in the treasury, when I'm on the ball, if I actually understand the thing that's moving the treasury market, that is, then I can like win every time. I can remember some weeks in the treasuries where I had like an 80% win rate, and my winners were like 2 or 3 times size my losers, and I would catch the swings, pick the very tops and the very bottom. Like I just was on the ball, during that time period, but it's just not all the time. You know what I mean? So the plan is to move over to micro treasury. So that's where a place where now there'd be an instrument that really ticks all of my boxes. So I'd never have any reason to trade anything other than that. Maybe I would still take some mini trades from time to time, or micro trades. And if I do those, I can probably try and trade it on higher time frames. Like, I think that some of the trades that we are going to try and take in the micro treasuries are going to be more spread trades, looking at things based off of forwards and so forth. So it'll be very different. It'll be very, very different. Another issue is that I really thought that the treasuries would move more today compared to the E-mini. Like, I thought that of these things, the thing that would be most effective was the treasury. It just, the way the news came out was really odd today, wasn't it? My robot hasn't actually taken a trade yet, believe it or not. So I think that that's kind of weird. I wondered. So the treasury market, it's kind of floating up, but like the cumulative delta is still like objectively down. Even in the 5-year, it's objectively down. I'm a little like weirded out by what it's doing. It's like they know I have a target down there, and they just don't want to go down to it. Always feels like that. Boom. If there are more stop losses to one side. One of the things that's really frustrating to me, though, is that you can't really tell with the data that we have available to us what kind of orders are stop losses and what kind of orders are just people getting in, Most traders are always talking down on my positive nets, so I stay solo. I don't know. So when somebody comes in and they start saying that they're profitable, my first thought is, okay, what's your risk reward? Is your average winner larger than your average loser? Like that's always the first question. And then the next question is like, what is your average hold time? Because there are ways in which I know that you can make money, at least in the short term, and I see it all the time. And it makes me really mad when I see people, oh, I'm a profitable trader. And then it's like, you look at what they're actually doing. It's like, okay, I'm not going to do that. That's an aggressive up move, relatively speaking, in the treasury. And here, the E-mini just like not doing anything still. Do I seeing it anywhere else? Well, I do see it in gold. Gold came back. Well, that's really weird, actually. Yeah, as the treasuries came back to the news price, gold got slaughtered. So we're still seeing that negative correlation with gold that makes it like a poor hedge. And what about silver? Silver's still up, relatively speaking. But anyways, the long and short of all of that big long rant that I gave you is that summer trading is really difficult, and I find it really frustrating. And I always traded on Sim. I always trade the summer on Sim, and I'm glad that everything that I've been doing over the past week was on Sim. And then I guess the other thing that was frustrating was that I wanted to do a YOLO on the combine thing today, but I was going through and like trying to test things. So like that combine, I think the maximum number of contracts that you could take was 2. So I went in and I tried doing 3, and it let me do it. I was like, oops. So I immediately blew that combine, which was intentional. Like I wanted to fail the combine like 2 or 3 times to see how their risk system behaves when you do it, right? But like then you go to reset it and they, not able to reset it fast enough. So, oh, actually, they might have it on here. Oh, okay, that's cool. Oh, okay, cool. They took care of it, actually. I don't think though that I have like a new one yet. It says that I'm on, like it has a new thing, but it doesn't give me. Let's see here. Well, actually, I wonder. Let's try it. Let's try it. Let's see if it'll let me connect. No, I have to go and do all the stuff again. Still waiting for order connection. That probably means no. What are you saying for trading? That's exactly when I buy gold, when people think it's a poor hedge. Why is it always stated in academia that gold is an inflation hedge? My risk is low and our reward is great. I don't hold on too long to any holding. It's always let cash this out while I'm up. I have friends that totally disagree with me. Okay, but that didn't really answer me the question. What is the ratio of your average winner to your average loser? You know, like if my average winner is 4 ticks and if my average winner is 8 ticks and my average loser is 4 ticks, then I got a 2-to-1 risk reward ratio, right? That's what I'm asking. Versus, I hold a 4-tick stop and I take a 1-tick target. That's the one that makes me suspicious. 50-50. Oh, okay. Wait, for real? So if you do 50-50, what's your win rate? I wonder why it's like not. It should be like rejecting me by now. That's funny. So is it just not going to show me? Hold on, I'm going to do this again. Oh. It does work. Wait. And then I have to go to what is it? The trader dashboard? Okay. They've already reset it. They just reset it on the same account credentials, essentially. Well, I don't have any trades to take today. I'll just let the algorithm run for now, and we'll see what we do. I'm kind of split between if the robot will be enough. I may have to step in a few times and take some trades. If we've got like a news move and I really think that it's like strong. Oh, which by the way, so we need to calculate. So one trade can't be more than 30% of your profits. So if we have to get 1750, or not times 1750 times 0.3. Okay, so the most that I should ever try and make is $500 on one trade. That makes sense. I was reading George's comment there. I'm not quite sure what he's... Oh, I see what you're saying. Well, that's trading, George. I tell you what. For there is definitely a lot of market inefficiency when it comes to buying and selling items, for sure. It's like extra work, but I actually have some stuff that I need to sell. I should probably do that this weekend. I need to check to see if because it's some audio software, or audio hardware, and it comes with software keys, and I got to see if I can pass the keys on to people before I sell it. And then I got it. And then I do need to get rid of them. Don't need them anymore. So I had a mixer. Somebody listed it with a slightly misspelled name. So I won the mixer for $600, which was their reserve. And it was like $1,000 mixer. So I made, like, I bought the mixer. I used it for a long time. I mean, I don't know how many years I used it for, but I used it. I got a lot of usage out of that mixer. And then I sold it for more than I got it from. And I bet you I could do it. I still have the turntables. I bet you that I would make even more on the turntables, because I think I bought both of those turntables for like $200, and they like stopped making them, and at some points they were worth like $1,000. Yeah, gotta get rid of those. Anyways, I think I'm just suffering from like trader burnout right now. And that tends to happen to me in the summer. Again, it's like summer trading just really sucks. If they're MK 1200s, they're still worth 500. Yeah, they are. Well, they are Technics. I forget which version they are. Like, I forget what make MK they are. Used, no needle. Yeah. Brand new, they're 1,000. I really don't think that they're worth that much, 1,000, but I don't know. The market, like the what they must cost to make is probably not even a fraction of what they sell them for. I mean, it's not that complicated of a mechanism. It's just like an electromagnet. I don't know. By the way, George, is this the first time that this isn't the first time that you've been on this stream, is it? I mean, like, I know you're a fairly new name, but you've said a couple of things earlier in the week, I think. But I'm also wondering, maybe you've been around for a long time, you just don't talk very often. I guess Magellan says like me. No, you've been around for a while. You haven't. You. Oh yeah, you lurk. That's right. Yes, you're one of our best lurkers. Well, what do you think? It's almost 8:30. Treasury market still not cooperating. I gotcha. Yes, I'm new, but I've been okay. Yeah. Well, you already said you've been trading for a really long time. So I would. Here's the question, because you claimed that you're making money. You didn't tell me what your win rate was. So if your the reason I asked the win rate is this: the claim is that if you're able to play the queue and find an inefficiency correctly, that you can do equal risk reward and 70% win rate. That's the claim. And I've seen people show it to me, and I've been able to do it myself for periods of a week, but I haven't been able to do it consistently. Like, this is why I'm like, I've only been showing myself here. This is why I'm like so fed up this week, is because I was like doing well with it. I was like, okay, like this makes sense. I need to practice it a little bit. And now like I've lost a couple of times and I feel like the whole thing is like crumbled, and it's almost like I almost feel like I don't even have a strategy anymore. I don't know what I need to do to get back into like it working well. But that's why I'm so frustrated. But that's the claim. So if you were getting a win rate up in the 70s, then I would be like even more interested. But it kind of sounds to me like you try and take longer term trades too. Gus says, I haven't had one good trade this week. Yeah, it's a shit market, dude. It really is. Like Monday, Tuesday were some of the smallest range, most frustrating days I've ever seen. Even on Sim, I didn't really take trades. Wednesday, we had some news, but the way the market reacted was just bizarre. Then Thursday, too. So, like, they were all waiting for this non-farms, and then the non-farms came in. It was just like market lunacy. It's been hard. Yeah. See, I got to get to that. One of the most difficult things to sort out is like how much of what is going on is you and your strategy and the market, right? So in this situation, though, I should be able to do really well regardless of what kind of a market it is. So I don't think it's the strategy. I mean, I suppose it is kind of a combination of me and the market, or at least my response to the market, right? But then, like, it is the summer, so I don't know. Warrior Trade made 40k yen. He lost like 100k a couple of weeks ago. I don't know. He seems like a good guy. I don't have anything against him. I just don't think that it's the issue I have is people saying, you just go and follow this person, you make money. It doesn't work that way. But it's like that with any of them. Like if I came in and I made $1,000 this week or whatever, like $1,000 in a week would be pretty good for me, right? It would upset me if people were running around on the internet going, "Oh man, this Seth guy, he made so much money this week. You should all start watching his stream and following him and learning to become better traders," because it doesn't work that way, right? You can't all just do what I do. Like I kind of intentionally keep what I do quiet and don't explain it to the full extent so that people don't try and follow the trade. Mike says Warrior seems to dump it pretty often. A few seconds after his 5k member room buys 10 cents. Does he really have 5,000 members? That's insane. Like, you have any idea how much thought you could definitely front run that, couldn't you? Oh man. Like I know I've always heard every time that his name comes up, especially like on the subreddits, that's what people always say is what Mike just said there, that he's just making it from his member room. And I always kind of thought, well, there must be something to it if, you know, that he's been able to make some, you know, after a while. But now you're telling me that he has a 5k members in the room and on a low float stock? Absolutely, you could make money off of that. Holy crap. Maybe take a step day or two off. Yep, and he only trades extremely low float. It's true. It's true. But when you look at like you go and use the issue is I don't know if I really have the data to make this kind of calculation in a stock, but we could go and we could apply the Kyle model to one of those low float stocks and to be able to see how many, shares would be like enough for there to be a market inefficiency of sorts, and I'm going to bet you that it's well within range of that. Like if you say it's 5,000 and then you assume that every one of those accounts is trading a significant, not a significant, but a reasonable sum of money, like maybe each one of them is trading $1,000 or something like that. It would be more than enough to make money just from his room trying to chase him. If I have 2 straight days of bad trades, I don't trade the rest of the week? Well, usually what I've been trying to do is like, if I'm not trading well, I will switch accounts and I'll trade sim, and then I will have to build up a certain amount of mojo before I'll trade it live again. So that's kind of how I do it. When you think about the thing, the warrior trading thing, like I also kind of wonder, like, how aware do you think he is of it? Do you think that he's really thinking, oh yeah, I can make money from all my subscribers trying to chase in? Or is it like he really thinks that he's good and he's like unknowingly doing it? I mean, I know that we would always take, I know that you guys in chat are going to take the what is the word? You think he's aware. Thing is like, we're not mind readers, so we can't really know, but he always says the results aren't typical every 5 minutes. Really? Well, there you go. I don't know. Like if you were in a room or listening to any kind of expert guru looking at a trade and they don't give disclaimers when they catch a winner, that like your performance might not be the same, then that would be like a huge red flag, right? Seems like he's been trading too long to be that naive. Okay, maybe that's a good theory on there. Preservation of capital is job number 1. Yeah. I don't know, man. That actually is kind of like, okay, how do I put this? Wow, what we need to do is we need to test it. So I've been trying to work this out in my head, and I just didn't know, like, what is the finding edge in your sizing strategy? Okay, so I can go in and on most of my strategies, if I go and put a daily loss limit on the strategy, it improves the results in almost every way. Okay. But I've never tried doing a like dynamically changing the size so that like if I win, then I increase the number of contracts. You know what I mean? Because any way that I can think of it, it would just be like you would just be taking more and more risk on as you did well. And then when you lost, you do lose. I don't know which way. I don't know. I need to read something about it. I feel like a fog all this week. Maybe it's because I've been playing too much Overwatch. Maybe I'm spending so much of my brain power on Overwatch that I can't put the brain power into trading. I've done that as a fixed ratio money management, but not in futures. Why do you guys put up disclaimers? Well, I put up the disclaimer because it's the responsible thing to do. I mean, Try different loss from top to threshold. I bet you there's some studies and stuff that we can read about this. Like, I'm really trying to think of something empirical where it's like, could there be a way of doing the sizing that if you have a strategy that's streaky, that it will do well? No, I'm pretty sure that George is not Salim. George is a very different way of talking. Smokey kind of seems a little bit like Salim. I don't know. It kind of gets funny when there's multiple people that are like new. So for those of you guys that are new, there's somebody that trolls our channel named Salim, and we've banned him a bunch of times, but he's kind of been behaving, so we haven't been banning him since. And he will come in and he will try and like take the conversation off topic. Basically, is what he tries to do. He tries to distract me, and. But he also uses a lot of accounts. So like the thing that's been funny is like it used to be that he would always make a new account after we banned him. But now it's been like he's just been using new accounts all the time. So whenever somebody new starts chatting, all of the regulars are like, oh, is that Salim? Because it's a new name. And so then they start looking at the tradecraft, the things that we look for to determine if it's him or not. So like when Smokey said, that was kind of made me go, But then I went and I read the context and I was like, no, okay, I think that one's fine. I'm not sure that one's him. I'm new, guys. Sorry if I'm bugging. No, you're fine. You're fine. You haven't done anything bad. You found my channel just yesterday? Really? One of the things that he'll do is he'll laugh in chat. So, anyways, that's why they're doing that. So they're wondering, but you got three of you because there's Smokey and there's George, and then there was it Jay-Z? Yep, that's right. Jay-Z are all fairly new. Like just this week. It's kind of interesting too, because actually, would you want to come back? And we got 20 minutes. That's been a long day today. That treasury, by the way, is just like gone completely dead. Oh, that's right. Freight train. That was the other one. I don't remember what was the last thing that he said, but I don't know. Maybe not. Uzi sounds pretty confident, so he's probably right. Oh, George, you didn't have to give me a donation. Thank you so much. I really appreciate it. And just so you know, lunch is on me. Thanks. I guess I'll go and have lunch because he wants me to have lunch on it. I try and put everything that we make on the channel back into the channel. But we're kind of approaching the point at which I've invested so much into the channel that there's like not really much else to put in. They always do market opens. I start streaming at 8:20 Eastern time. So I'm always here right when the treasury market starts trading is what I try to do. And then I trade until 11 Eastern time. So we got like 15-20 minutes left. Yep. Okay, so somebody was saying, I've heard these money management techniques also increase the risk of eventual ruin. I do think that is accurate. Well, so if you use the Kelly criterion, then I think that you have to reduce your size as you get up, if I recall correctly. How does it work? There's something where you can go into the Kelly criterion and that you can change a certain variable and see what it changes. But I think that the overall amount of money, like the risk per trade compared to the size of the portfolio, that ratio has to change as you get larger. Otherwise, the risk of ruin goes up. So essentially, it means that you can't just come in and say, okay, you've made $500 in E-minis. Every time you make $500 in E-minis, trade another contract. Like, that'll work at the very beginning, but once you get past a certain threshold, you have to change it, and you have to require more in the account in order to let you increase it. Otherwise, your risk of ruin just from the probability of a losing streak, approaches 100%. So there's that side to it. I know a guy on YouTube that when he wins, he bets his entire profit on the next trade, and then the next one he is back to normal. That's because diminished returns law. Oh, it's interesting. I don't know. See, that's why I've never really worried about it, because my thinking on it has been, you just trade one contract and how much would you make, and what is the statistical properties of that. That's where I've always taken it. So I think that if you have a trade where you're taking equal risk, you have a positive risk reward ratio. Okay, it's more than one. Okay, I don't think that it has to be 2-to-1 or 3-to-1 or anything like that, but maybe it's 1-to-1 or maybe 1.5-to-1. Okay, you're doing that, and then through all of that, you get a Sharpe ratio close to 1. Then I think that you got a good trade. But even just that is super crazy hard. Super crazy hard. Here, I'll show you. We were doing this the other day, right? We were talking about this the other day. I didn't really explain it, but I was showing you the other day. Here are all the strategies that I've ever run. And if I sort them by Sharpe ratio, there's some that are just dismal. Okay. I have 2 that are above a 1 Sharpe ratio, right? One of them is only 244 trades and was a strategy that we gave up on because we didn't think that it worked. Yeah, I need to go back and look at that one again, but I digress. The next closest one that I get are these volume weighted ones. And, yeah. The problem with these ones is that they don't have stops and targets, right? So will it show me the properties of this one? Actually, it does. Okay, cool. So this one does have a positive, a above 1 Sharpe ratio, but there's some problems with it, right? The gross loss is actually relatively high. The max drawdown is actually relatively high. And notice the difference between my average trade and my largest trade. So what's really going on here? I have a strategy that's not using stops and targets. It's just only flipping when it gets the signal, which means that it's really actually risk arbitrage is what it ends up being. It's just like if you traded a moving average and you had no stop. So that's why that one looks so good. Reginald, maybe he could be a good trade. I don't know. Yeah, man. It just looks so good. Why it's only well, it takes 1 trade per day. I know this sounds like the stupidest thing to do, but I'm about to drop 100 on Bitcoin and sell at a random high if there is one. Well, I don't know. Bitcoin has just been really quiet lately. I want to make a proclamation on Bitcoin. Like, I want to say it's just going to go down. But like when I look at it, it's just like not really moving right now. It's probably not in a spot where I can really make a very accurate short-term prediction in Bitcoin. Especially with where it is on my indicator, it's like usually these will continue going down and deflate all the way, but it hasn't been working out like that lately. There's like other factors involved that are doing that. Anyways, you know what I think is interesting is that we have had less viewers this week. We've been hovering around the 16 to 24 range. Well, we've got a lot of new people participating, so that's really good, right? Man, maybe I really need to just look at Reginald again. And he runs on 1 minute data? Like, why isn't that not work? Why was that not working? Equal risk reward 16 tick stop? I don't. So the tick replay, because I remembered that one. It was like, oh, this one is so good. And then when we started doing it on the sim account, it like lost every time. Remember that? That's interesting. Why have a stop at all? You know, one of the things that's really difficult with all of this is that there's like things that you could do at every little step, right? Like I could come in and say if I'm in a trade at every step of the way, I will look for certain things to determine if I should get out. Even if I'm in profit, I should look for certain things. And if I'm in loss, I should look for certain things and get out, right? Like those are all things I think we could look at. And there's probably 1,000 different ways that you could do something like that to look at and see if it makes a difference. And it's like, there's no end to it. But then for every one of those things, there's like trade-offs and stuff. Like if I do that, then I will often take smaller profits. Like that, the nature of it is that you take your profits faster or you take your stops faster than what it would if you just held the set risk reward ratio, right? So then like that messes up all the stats and you're not going to get enough out of your winners and you're not going to make money, right? So like how do you deal with that? I just don't. There's too many things to try. Well, I'm kind of trying to think about what I should do with this treasury trade. It doesn't make sense to try and hold it all day. I suppose that we can just take it off here, and so I don't want to be paying attention to that all day. And then Jay didn't take a trade today, so size 1 on the S. Okay. Well, maybe I'll leave him on just in case he takes a trade later today, because I just want to see it take a trade and just to verify a few things. Take pictures of all your trades. Yeah. 90% win rates on options. Well, so now here's something that's kind of gets interesting though, right? Is there are some strategies that are actually widely known that do result in a profit. Is just that they don't result in more profit than straight investing in the S&P 500. Yeah. So if you're scalping, it kind of makes sense to maybe scalp around a strategy like that. Well, it's just kind of been hard to do that, especially like in the S&P 500. Like one of them is sell the treasury and buy the S&P 500. Like how do you make money off of that one, right? But in the treasuries, I think we have one because like that study that we were reading earlier, we can look at the forward rates and look for some mean reversion in the forwards, right? So that one's really hard just for me to do because I don't have the data. I need data. You find some treasury data on that would include data that would allow us to do forwards. That's what I think we got to do, right? And then we should try basing our bias in part on mean reversion of the forwards. Don't know how to systemize that. Well, the issue with the option strategies, you have to have a big bankroll to do it. Because there's a lot of holding risk on it. Right? Like you want them to expire worthless, essentially. So you have to hold them into the expiration. And like, what if something like some big move happens right at the expiration? And then that's where you could get this crazy loss that kills the portfolio. So then you have to have a huge account to do it. And the amount that you make, is it that much? No. But then it goes back to like, well, I should be able to just like put bids and offers out there all the time and make the spread. If you could get a good spot in line, unfortunately. It's a little more complicated than that, Kyle. So what I would look up is like, I forget what they call it. There's like a specific term for it, but there's a risk when you're doing those sorts of things where one side of your spread might get executed and the other side doesn't. Something I've noticed this week is that the price will hold all morning, early afternoon, and take off end of day. Shorts keep getting squeezed. So, Gus, have you read this study where they said that there's a high correlation between the direction that the market moves in the first 30 minutes of trade and the direction that the markets move in the last 30 minutes of trade? And they believe that the reason it happens is because there's some hedging activity that happens later in the day. So it'll revert throughout the day when it really shouldn't. And then when they close those out of the close, and then it goes back positive. I don't know. There's in the Discord, in the education room, somebody posted that study and it kind of explains why that works. There are folks who only trade the close, probably. That the best business is conducted during the first hour and the worst business is conducted during the last hour. I don't think that that's completely true. So, there is a lot of business that happens on the close because of the way that the closing auction works. They do the closing auction on the NYSE the way that they do because it allows institutions to trade large amounts very quickly. So there's a reason that they do that. And so because of that, there is some opportunity. If you know which way they're going to trade it, then you can make money on power hour. But generally speaking, for day trading, the earlier you make your money, the better for sure. And the best trade tends to be at the beginning. In the treasuries, there's often a pretty good move just like off of the open. The trades during the close are executed with a different reason. That's true. But I'm saying there are institutions that they want to buy a lot of a stock and they just do it on the close. They just do it on the close. They put market on close orders. I think the bigger thing is that people come in on the day and, like, if you're a hedge fund and you have a plan for the day, I want to buy this or sell this based off of this information, right? And they want to get that transaction done as quickly as possible, essentially. And so that's why your better opportunities happen at the beginning. Even if it's a really large meta order, most risk adverse large meta orders, the half of that meta order will trade right at the beginning. So, which was a very counterintuitive result that resulted from Almgren and Chris. So, the first trade is usually the best trade. Yes. Yes, it is. Doop-a-doop-a-doo. Still thinking about what I think part of my problem is that I just want something new, like I can play games and things like that, but sometimes I feel like from an entrepreneurial perspective, I want to do something new. I don't know. I just feel it's just really odd day and I just have a lot of mixed feelings today. It's kind of weird. And I'm sure on Monday I'll forget all about it. July what do we got coming up in July? I don't know. Markets might be relatively crappy until Jackson Hole, right? Have you thought of selling products why would I sell on Amazon though? Maybe I should put more effort into the book. We need to write a book, huh? Let's sell the book on Amazon. That could be great. So I think that I could provide a lot of stuff that I haven't seen anywhere else. Well, I gotta get going, guys. I will see you guys on Monday. I do think I'm gonna try and make a video this weekend. This is gonna be a little bit different, so stay tuned for that. In the meantime, stay profitable, friends.